Welcome everyone to HueFin News. Today is January the 2nd, 2019. This is the home of the 2-minute price prediction, as well as giving me all the news according to the charts. Now, what we're going to talk about today is just breaking news for Tesla stock. They missed on the deliveries of the vehicles for the last quarter of 2018. It's causing a major drop in the price for this company. Now, we did a video on December 22nd, 2018, telling you all that Goldman Sachs has a sell rating that they were expecting the beginning half of 2019 to be one of lull in demand for their Model 3 vehicles, and as well as with the lapse in the federal tax credit for EV vehicles, they felt as if Tesla's prices will continue to move to the downside. And in that video, we also were in agreement with what Goldman Sachs were doing, and at that particular time, the market was trading around $319, and currently you can see that it's around $310. Tesla stock fell as much as 10% in pre-market trading today, so it's definitely one that the market did not like to hear, how they miss on the deliveries in the fourth quarter. And one analyst here, as you guys can tell in this Market Watch article, is expecting that the fourth quarter is going to be as good as it gets for the next couple of quarters for Tesla stock, or the deliveries of their vehicles. Okay, so we're going to go ahead and look at that. We're going to go ahead and look at the price chart to see the continuation of our analysis of Tesla stock moving to the downside, if that's still in play. Okay, so we're not going to waste too much of your time. Just want to simply come in and show you what is likely to occur in Tesla stock in the beginning half of this year 2019. Before I do, if you guys appreciate this video content, make sure that you go ahead and subscribe to this channel. If you like the video itself, make sure that you like and share this content as well, because we're giving you our forward price predictions without any confusion, without wasting your time on looking at articles, because the truth is already listed on the price charts. Okay, we will also have that video that we posted on the 22nd of December as an end card at the end of this video, so make sure that you guys go ahead and look at that as we continue to move on. Okay, I'm gonna go ahead and play a little snippet of that video that we posted on the December 22nd, 2018. It's only a couple of seconds. I want you to listen to what was mentioned from the Goldman Sachs analyst on the Market Watch article back then, and see exactly what is occurring on the first official day of trading of the year 2019. So just take a moment, listen for a couple of seconds, and then I come back in and tell you exactly what we're expecting Tesla stock to do. Okay. Now, the Goldman Sachs is expecting that the Model 3 production and the combination of its pent-up demand and the looming phase out of federal tax credit, that's not expected to last. So that is one of the bullets that they're using in their analysis for a sell rating for Tesla. Okay, so as you guys have just read or just heard, the analysts at Goldman Sachs already expected to see a lull in demand, and as well as the tax credits being eliminated for Tesla, that the demand there and the feasibility of people wanting to buy the Tesla EV vehicles would wane and create a lull in demand. And that is exactly what occurred when Tesla reported that the deliveries during the last 3 months into that rose 8%. But obviously, the market was expecting 64,900 Model 3 vehicles to be delivered, and they only delivered 63,150. Okay, so that definitely the market did not want to hear. They missed estimates, and on top of that, this is what analyst Ramesh Shah said. He expects the fourth quarter deliveries to be as good as it gets for the next 3 to 6 months, given an in-transit lag in Europe, the phase out of the US tax credit, and lower Model 3 backlog, and evidence of a slowing global economy. So obviously the backlog of the Model 3s is dwindling. So they do not have a huge backlog of individuals who wants to buy the Model 3. And then there's evidence that the global economy is slowing down. The US tax credit, all is coming against Tesla at this current moment in the year 2019. So on top of that, I saw on CNBC today that they have a huge debt that is coming due in the first quarter of 2019. So that also is going to be a hurdle that Tesla will have to overcome in order to see some increases to the upside in price. Okay, now Dan Ives, he is a bullish analyst for Tesla stock. He's definitely seen Tesla as a buy currently. He works for Wedbush Securities. He stated that while Tesla price cuts could help soften the blow of the tax credit cut, is not what the bulls wanted to hear given the impact on profitability. Okay, Tesla is trying to accommodate to the consumer by reducing the prices of their vehicles by, I think, $2,000. Okay, to try to alleviate some of that tax credit that is not available anymore. And that's not what the bulls wanted to hear, because it's going to have an impact on the revenues that Tesla's going to be able to bring in as a company. Okay, he goes on to say as well that the price cuts and the fact that deliveries miss expectations will be a cloud over the name until the company reports earnings in late January. So expect some more volatility to occur in this particular stock. And he gives initial guidance, and as well as reporting Tesla's initial guidance for the European Model 3 demand for 2019. So a lot of people are waiting to see what is the demand for the Model 3 over there in Europe. And once we receive that, that should possibly put a spur in upside movement in Tesla. But overall, there is a major cloud over this particular company, considering that the tax credit is gone. They're going to have to pay a huge major debt in the first half of 2019. They reduces the price of their vehicles to try to alleviate some of the tax credit that is gone. So all of these things are hurting Tesla stock at this present time. Okay, but you can see here that Ives, he kept his rating at outperform and his price target at $440 per share. So definitely it's going to be a while before we might see the Tesla stock price hit $440. But nevertheless, we just wanted to come in and break in and show you that what we reported to you on December 22nd, 2018 is still in play today in the market for Tesla. Okay, so now the question is, are we going to see the continuation to the downside? Because on our last video, Goldman Sachs had a sell rating on this stock, and it had a price target of about $200. Now, we didn't expect it. We're not expecting it to really come all the way down to $200, but definitely this downside move in Tesla is still in play. Okay, so the market, even though we ended the month of December all the way up here at $332.80, we're starting off the month of January literally here at support. Okay, the market for Tesla, if it breaks to the downside on the close on the monthly or even a weekly time frame, then the movement to the downside is still in play. It might hit that $280, but ultimately it could come anywhere from where it's trading now all the way to our ascension line. Okay, so definitely keep that in your mind as we go throughout our analysis for today. Now, the week for Tesla, it's not starting out pretty good. Okay, if we are going to close the weekly bar towards the low of this current bar, then we will continue to see indications of market weakness and lower prices. Okay, we did finish out 2018 on a high for Tesla stock, but currently we are definitely going the opposite direction, starting the first half of trading for 2019. You can see here, even on the daily price chart, the market came and bounced off $300. So that is the saving grace for Tesla at this particular moment. Okay, that is the support area. We came, started our pre-market trading, came all the way down to $300, about 9-10% to the downside, and we came and bounced off of it. So this is telling us that we're going to live to see another day in Tesla stock to hold consolidation, but the overall market move is still trending to the downside. So our analysis that we mentioned on December 22nd about Tesla stock is still in play. We're still seeing weakness in the market for Tesla stock. The recent news on the miss of their delivery expectations, the elimination of the federal tax credit, a lot of these things are still hindering the stock from seeing an increase to the upside in price. Over the last couple of days of December 2018, we did see a small push to higher prices, and all of that is literally gone in one day of trading. So that's why we're still holding to the stance that the price chart is still telling us that Tesla stock is weak. We're still looking for it to move to the downside, even though we understand that it can hold support at $300. Okay, but the moment that we break it to the downside on a close, we're definitely looking for 280 or even $260 in the very near term. So that is what you need to be on the lookout for in Tesla stock. Okay, so that is our analysis. This is what the price chart is literally telling us about this particular stock. It is still weak. We're still looking for it to move to the downside. And with the recent news from Market Watch and across the media about Tesla, definitely reveals the fact that the overall market sentiment is weakness as well. We're not seeing any positivity on the price chart as well as in the media, which is one of the main reasons why we're still looking for Tesla stock to move to the downside. Give us your thoughts, give us your opinions. We do appreciate you all taking the opportunity out to watch our video, because we're giving you news according to the charts without causing you any confusion. Make sure you all maintain your profitability. I will see you all later.